Welcome to this video. It's Sunday, it's the 18th of June. Now, in terms of today's video, we're going to be looking at a couple of what we consider to be high probability chart setups at the moment. They are Euro, USD and gold. Now, in relation to the charts that we're going to be looking at, we're going to be using basic technical analysis, very simple technical analysis, backed up by our favourite tool in Forex trading, the COT, Commitment to Traders Report. If you're unfamiliar with it, you can watch an explanatory video under this one and it'll explain why we consider it the most valuable tool in Forex. But brief terms, what we want to do is always be trading with smart money commercials when they move against non-commercial speculators in the market. So we'll look at the charts in a moment. Now, a lot of people have written to me, so you've done a lot of COT analysis this year, but you only do currencies. Do you trade commodities? The answer is yes, I do. Obviously, featuring gold today. When I first started doing the CFTCs, I wasn't really that interested in currencies. I was actually a commodity broker. So gold is a really good one to use the CFTCs in. Also the other precious metals, not just silver, but also platinum and palladium. Also another good commodity to use it in is crude oil. A lot of people have written to me and said, you talk a lot about crude oil. You don't really seem to trade it though. The answer is I don't actually. I don't trade crude. I'll use movements in crude oil to give me clues as to what's going to happen in the petrocurrencies, okay, like the CAD, the NOK, the RUB. If I want to trade in the oil markets, I mean, this is just probably what I'm used to. I would normally trade crank spreads. Some would be crude against distillates. That's just the way I like to trade. I've always found that, in inverted commas, a low risk way of trading. But yeah, just get used to CFTCs in whatever you want to trade them in. Now, in terms of Euro USD, we've done a few charts on the Euro over recent weeks. I've featured Euro CAD, Euro USD and Euro JPY. I'm not going to do Euro CAD and Euro JPY today. Euro CAD had that nice full 300 pips which we saw. Still think there's further downside there. Euro JPY, a little bit of a bounce, but that is going down in a major way in our view. Bounce is going to be a sell. They're in the member centre. You just go and check them out there. Obviously, when we do the daily updates here, we're going to be focused on Euro USD. And yeah, if you look at the media at the moment, generally the media is pretty bullish of the euro. See a lot of people saying it's a buy on the dips. Okay, commercials have been warning for a few weeks that the Euro USD is going to break down, and I still think it is going to break down. It's come down a little bit, but I think it's going to have a major move to the downside. So let's have a look at Euro USD, then gold. I'll come back with a few other tips on using the CFTC net traders. On Euro USD daily, just before I go to the chart and draw my levels, I just want to look at the CFTC net traders positions visually. They come over better, I think, when you've got small ratios, and the groups are relatively small in their ratios in terms of longs and shorts, but the speed of change is pretty big. Now, if we look down towards the right where I've got my cursor, I've got the red line. That is just basically small speculators, so we're not interested in that. Green line is obviously non-commercials. Blue line is commercials. Okay, so what has happened? Well, what we see here is the commercials and non-commercials cross over for the first time in 3 years as we gap higher. Okay, now as we move higher into this congestion zone here, what happens? Non-commercials are really building up their longs, commercials really building up their shorts, and we've sort of come off this high. So we've got the commercials selling heavily, non-commercial speculators buying heavily. We think the commercials are going to come out ahead, and we are going to see a significant fall in the euro. Now I'm just going to go and draw my levels on the chart so you can see how we view the price action and important levels. Euro USD daily, we obviously saw on the previous chart when we get this gap here, non-commercials become very bullish. First change over to a long position in 3 years. Commercials start to move their hedges. Now, gap is on the French elections. Relief about Macron winning. News turns bullish on the euro, and obviously non-commercials, they're going to buy the first dip. It's a classic dip back to the 20. Big push up here. as the news gets even more bullish for the euro, that the ECB might curtail stimulus or even raise rates. So we've got real sort of bullish news for the euro. Specs are going to want to buy the dip. This tail here is a buy. It's a shallower rise. And what we do is we come up, and you note I've put a 40 turn down candle here, the red one. Now, in terms of indicators, in the current low volatility environment, very few indicators are going to give you any decent signals, because you're getting a lot of choppy action and basically false signals from any indicators, like stochastic, which I've got down the bottom, for example. But the ADX is consistently able to give decent signals. Now, for those of you not familiar with the ADX, when it goes above 40, this is the black line, and turns down, that normally indicates you're going to get a reaction to the prevailing trend, either up or down. Obviously, this trend is clearly up. Notice we did get another 40 turn down here, okay? Did get some reaction, okay? Got another one, we get some reaction. So the ADX turning down again for us is bearish. So we know, okay, on the red candle here, we got turned down, we can look to come in short. She hits against resistance again, hits against resistance again. She comes down and finds support at the 20-day moving average. We will cover our position here, actually. It's just a minor profit, but we want to see the 20 really get cleared out. And look what happens. This is another dip. Speculators want to buy, and then bang, there she goes and comes back. Now, that for us is exhaustion, okay? If I could just draw the line across. There we go. See, the tail just pokes through, just cleans out stops. Anyone who's got a close stop behind that quadruple top is cleaned. Basically, we can't get above 113. So for us, that is probably, well, it is an indication that the euro should come down. So basically, we have re-enter on the break of the 20, and we're below the 20 at the moment. So what will happen next? Well, I'm looking to see if we top out into this level, obviously. This is going to provide resistance and 113, so our stop is back at 113.60. I think, that blue candle, well, the blue candle here, if she fails into the 20 and breaks, that's it, okay? My target is down here, 107.30. Now, obviously, you've got to watch it as it develops, the trend, because change every day, the price action, you have to respond to that. But at the moment, I would see the euro breaks here. I think it's lights out. She goes up here. I'd certainly be looking to sell if I wasn't in, okay? So for us, this candle here could be the significant one. Now, in terms of the last few weeks, I've done videos on Euro USD, and if we haven't really seen that much motion in it yet. But what I like on this price action is it looks like it's just getting ready to break. You got sort of sideways consolidation after a nice big rise up, and you got very low volatility. Okay, low volatility doesn't last long. It should change to high. Breaks down. I think we're going to follow through. I just think euro now, the bullish news for it is exhausting. The commercials are selling hard, and they're not going to give up selling, in my view, at these levels. They're going to keep shifting hedges. So for us, we think we're going to the downside. Let's move to the next chart. And in terms of commercials and non-commercials, basically the way it's working in this contract at the moment is you've basically always got the commercials short and non-commercials long. Okay, so you're not looking for anything other than divergence here, but divergence can be pretty good. You just want to wait for the groups to really start to oppose each other on rallies. Okay, so what we've got here, nice big rally. Well, it's a lovely big rally up, isn't it? And then non-commercials, very, very bullish. Commercials increase their hedges short. Nice drop down. You get the same up here. Okay, so you get another rise. So on this candle here, you've got the commercials, sorry, non-commercials more bullish than on the last peak, and you've got the commercials more bearish on the last peak, so you get a counter trend reaction. Okay, then of course what we see is another big rise. Non-commercials build up longs, they become even more bullish than on the previous peak. We come down, commercials even more bearish than on the previous low over here. Now, in terms of gold, obviously you can use the CFDCs in two ways. If you're a gold bull, you could use it as a profit-taking signal. If you're a gold bear, you can use it to put in short positions on the peaks. Okay, so when the commercials and non-commercials really oppose each other, there, and there. Now, in terms of, I think everyone's got a strong opinion on gold. I mean, I'm basically bearish long term, but I can appreciate the bullish scenario in the short term because speculators just want to buy it. Now, let's just shift to the daily chart. Just want to go through how I see prices going from here after the recent dip. We are on gold weekly now. Up here, back in June of 2016, we see gold peak out, take out the 20-week moving average, strong move down, come back to test it, then a lot of red candles on the way down, and we reach a bottom. Okay, so we reach a bottom on a bearish extreme, we push up, take out the 20-week, get a bit overbought, come back, then we find support at the 20-week here, okay, on that double bottom. Okay, then, sorry, we move up again. Then we come back, go through the 20-week, but come back up, get just on it, and then push up. So now you got a triple bottom there. Okay. Now, from the perspective of gold, obviously it depends on whether you're a dollar bull or a dollar bear longer term, where you think gold is going to go. Longer term, I'm a dollar bull. And I think, obviously we got up here, came down, found support. This candle tries to take out this one here, fails. So I think now, okay, that's pretty good kind of resistance. Okay, at the 129 level, we're here just above 20-week moving average. Now, that's that tail there as well. Okay, so you got 20-week and a tail. Okay, she breaks that. I don't think we're going to find support here. I think we're going to tumble all the way down. Dollar, very oversold. No one really thinks it's going to mount a serious rally. I personally think it will. So I'll be looking for gold to come all the way down to 114. And at the end of the day, gold we know is priced in dollars. Okay, now a lot of people say, well, stock market weakness, that's really going to boost gold. It'll boost the dollar. Okay, and that should mean that gold should fall. Now, in terms of, if we look back to 2008, if you did get a big stock market correction again, so the dollar is going to do better than gold. 2008, that was the scenario. I think that will be the scenario again. Obviously, if you're a dollar bear, you'd see this chart in a completely different way. Let's just go to the daily chart now. I just want to show you how we're playing it. On the chart of gold daily, just before I go and look at the recent price action and what's happening, where I think we're going to go, just to draw your attention to the ADX 40 again. And in terms of here, we do rise above 40, turn down on this blue candle here. Unlike the euro, where the prevailing price action was up, it's down here. So you're looking for a move the other way, to go up. What happens is she comes through the 20, settles back on the 20. If you're a gold bull, you'd probably want to go long. So get above, find support, and we push off, find support at the 20 again, push up, find support, then crack the 20. Now, if you're a gold bull, you could trade that, trail your stop up and make some money. Now, I actually didn't do that trade. I didn't see it, and at the time, I don't think I was too interested in gold anyway. But, everyone trades differently. You're a gold bull, giving you a good signal. Now, in terms of what we got recently in the ADX, we've got absolutely nothing, so we're not going to use it. We're just going to rely on pure price action and what we saw from the CFTC net traders. Now, what we did see was obviously the commercials really accelerated their selling into 129. Nice blue candle up here and another blue candle up. When we saw that, anyone on my email list will know this. I want to sell it. Okay, so back through the level. Let her clear the level. She comes down, finds support, Okay, I thought it was going to break. It doesn't. It comes back. So we'll exit there, okay? Yeah, she just didn't seem to want to push away from the 20. So book the profit, and then I'd be looking to resell again. This candle here is a significant one for me. Why? Because we get that big spike up, reverse back below the 20. I think the buying is exhausting itself, and I think we're going to go lower. So just come back in, and now we've moved away from the 20. So the 20 should now provide resistance, and I'm just going to draw a straight line just across the 127 level. You can actually continue it a little bit to the left as well, can't we? So we could go over there, sorry. So if I do, sorry, I have real problems drawing straight lines. There you go. So cracks up on this blue, comes down. That red is significant. So I think now the 20-day moving average is going to provide resistance. And if I do this, I can get a double trend line through those 3 candles. Okay, so you've got the 20-day here, double trend line resistance. I think that's going to be, yeah, where rallies are going to fade back to. Now, I did say the first level of support on the weekly chart, which is down here, is probably not going to hold. Okay, it's still a good distance if we go down to it. I just do not see that holding. I'd be more interested in this level before we hit the 114 level. So for me, yeah, plenty of downside potential. And yeah, in terms of the USD, yeah, the consensus view is that it is going to remain weak. Yeah, like I said, I don't share that view, so that would give me a gold bearish bias, unless we close above those 2 lines here. I would remain a bear. Just feel the dollar, yeah, very oversold. Gold is due a correction. I think some more non-commercial specs are going to get taken out and stop. And this is actually a favourite of hedge funds, gold. So yeah, I'm bearish of gold. So that's my view of it, and we'll see what happens. I'll come back off that short review there. Now, in terms of my view of those charts, that is as of right now. Of course, my view can change in line with the market conditions. If you want our full trading techniques and our daily technical analysis of major Forex pairs, simply click on the link beneath this video. Now, another question I'm frequently asked in relation to the CFTC net traders is, a lot of people write to me and say, you know, we've looked around online, we find a lot of people saying it's actually the non-commercials who are the smart money, not the commercials. Okay, you should be trading with the non-commercials. They're not the smart money at all. History proves that they're not. Okay, now in terms of, you know, trading with the non-commercials in a big trend, if there's no divergences around, yeah, I've got no problem in doing that. Or if the commercials are not significantly against my position. But when those big divergences occur, or you see the rate of change in the group speed up, I want to be with the commercials. Another point I want to make is that all the people who actually say non-commercials are smart money are appealing to one of the biggest myths in trading. Yeah, for most beginners who come to the markets, they think that hedge funds, big bank funds, yeah, they're smart money because they make a lot of money from the markets. They don't. I mean, you get the odd hedge fund that does well. Let's say Bridgewater today. Obviously, everyone's heard of George Soros's quantum fund in the past. They are the exception to the rule. A hedge fund performance over the last few years has been dire. Most funds have ended negative or had to shut down, and the best ones are not even in double figures. Just go and look up the statistics. Now, the peculiar thing is, like, the commercials, no, sorry, non-commercials can be right about a big trend for a while. Obviously get hit at the turning points. But even if they're right about a trend for a while, very few make any money out of it, or significant money. And I'm going to do this in another video because it's one of the most important things you can understand as a trader, and it's the way you view process and outcome. If you view it in the right way, you'll make money. You'll make more money than the average hedge fund. Yeah, basically managed money doesn't focus properly on the relationship between process and outcome. I'll do that as another video. Now, in terms of yeah, people who also say, yeah, non-commercials are the smart money, my usual response to that is, yeah, they're appealing to myths, obviously. And do you ever see them give a trade? No, it's normally in hindsight, of course. So for me, commercials gathered it. I think it's the smart money way to trade if you use them in the right way. Now, if you want to use the CFDCs in the right way, get a really deep insight into how to use them. Mentioned it, I think, last week. I'm going to mention it again because I think it's a great book. Go and get Steve Bryce's Commitment of Traders Bible. Yeah, it's 300 pages. Yeah, he's, you know, an acknowledged expert on using the CFDCs. He's been around since, I think, the early 70s. A lot of experience. Fantastic book if you're serious about making money with them. Strongly recommended. So, I think I've covered everything I need to. That is the video for today. I'll be back next week. Take care. Have a good trading week.